Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. Last trading day of the week, and we're absolutely muted on the Nifty as well as the Sensex. Banks are giving up a little bit more. We'll talk about all of that in detail in just a few moments. But to the headlines straight off. It's a lackluster day of trade for the markets. The Nifty trades below the 10,800 mark. The Nifty Bank is the only sectoral laggard. Kotak Mahindra Bank is the top loser on the Nifty. After 3% stake sale in the lender changes hands in 6 block deals, sources tell Bloomberg Quint that ING Group is the seller. On the other hand, oil marketing companies are leading the gains on the Nifty after crude oil prices cool off from their 2019 highs. And among the broader market stocks, Bata is trading at a lifetime high. The stock is up for the third straight day in a row. Good afternoon, Neeraj. Last trading day of the week. Slightly more mixed bag week. The first half was not all that good, but last 2 days were pretty okay. Yeah, and actually save for Kotak Bank and the kind of sharp reaction that it has, maybe the Nifty Bank too could have done okay. But the Nifty is lying absolutely flat, so not a bad thing. Nifty Bank about 0.5% off, so 161 points in the red for the Nifty Bank, and that's courtesy some key losers like Kotak Bank as well. Bring up what the mid-cap and the small-cap indices are doing before we get the heat map up on the screen. About 1/3% and 0.75% for the small-cap space. So that aspect seems to be doing okay for itself. Now, let's get up the heat map up on the screen and see what's moving and what's not. Kotak Bank about 3.5% lower. HDFC Bank about 1% lower. So those are the two that kind of stand out. Reliance Industries about 1.5% in the red, so that's the heavyweight that is correcting. So between these three would be the top contributors on the downside in the session today, and then you could probably have an ITC or L&T or thereabouts doing that too. On the gaining side, OMCs are the ones which have done well. Vedanta continues to rise and shine. ONGC continues to rise and shine. So that's the bucket, the beaten down names which have for the last 3 or 4 sessions done well, and they continue to do well in the session today as well. So that's essentially what the large caps are looking like. But the mid caps, a lot of riffraff flying around in addition to some quality names too. Most definitely. Today is going to be an interesting mix of price performances. While the index itself is up about 0.5% on both the mid cap as well as the small cap index, a third of it, a lot of penny stocks are actually seeing gains in double digits in today's session, and these are just a few to highlight them. Suzlon, a 5 rupee stock, up 22%. GVK Power, last 2 straight days of gains, including today. The stock is up 40% in two sessions, bringing it up to about 7.5 odd rupees. And JP Associates is the other one that looks to gain about 4.5 odd percent. This is just 3 of the stocks which are trading, which are of a price point under 10 rupees and are trading with gains of double digits. ADAX stocks continue to rise up. So Arcom, another penny stock within the pack, 6 rupee stock up 5%. Reliance Infra is up 8.5%, and RNAM continues to move up. Yesterday, upper circuit on the stock. Today, once again, the stock's up about 9%. Other stocks on the move, you've got a Rain Industries, good double-digit gains coming in there, closer to 10% on the stock. Motherson Sumi and Avanti Feeds. Traction continues after good numbers that it posted for Q3. Near their 52-week highs, or even making new 52-week highs in today's session, are Bata and Aavas Financials. Bata now up 1% in the session at 12.96, and Aavas Financials 4%, almost nudging 1,000. Volume buzzers, Inox Windtech Solutions and Himadri Chemicals are trading with higher volumes and the pricing activity, as you can see on your screens. But what's happening in the futures and options space? Let's bring in Agam Vakil to highlight that for us. Agam.
Well, thanks for that, Devina. At this point, we're again flattish cues coming in for the benchmarks. We're not really seeing too much movement, and the Nifty as well as the Sensex, largely where we left off yesterday. Given that, we are seeing further unwinding in futures for the Nifty banking futures. While there has been some amount of traction, a little bit of underperformance in compared to the benchmarks, there is also once again a longs unwinding coming through as far as the Nifty banking futures go. Now, when it comes to the wicks, it's further down by as much as 2.5%. In fact, now inching back towards the mark of 15.5, and this is the sticky range within which the volatility index has moved within in the last, well, I would say 3 weeks or so, save for one-off instances. But when it comes to change in OI, and this is where things may get interesting, is as we move into expiry, of course, is that, well, it is essentially the 11,000 mark, which is seeing a lot more writing coming through, the 11,000 calls specifically in this case. But moving on, let's talk about, well, some of your stocks. And Kotak Mahindra Bank, of course, is right at the top. There's been a considerable increase in OI there, 62%. But this is also because we don't see as much traction in Kotak Mahindra Bank in futures. Arvind, of course, is the other one which is under a lot of pressure. And, you know, it's a constant decline downwards, near 16.5% increase in OI there as well. BEML on the gaining end, fresh buying coming through with 19% increase in OI. And the other stock that you want to address is Yes Bank. But this is where we're seeing a lot of short covering, considerable amount of short covering, 22% decline there even as the stock advances by 3%. So watch out for Yes Bank. Mixed cues coming in, but among stocks which are gaining have a little more momentum as compared to those which are losing out.
Right. Agam, thanks very much for that. That's the FNOQs this afternoon. But let's begin with the newsmaker of the day. Kotak Mahindra Bank has dropped as much as 5% in intraday trade after a 3% stake in the company changed hands in multiple block deals in the morning session. Yatin Mota, he's back with us with more details on the same. Yatin, your sources seem to be suggesting that the seller is ING.
Yeah, Devina, and yesterday Bloomberg Quint reported that there is a possibility of a block deal which will happen in Kotak Mahindra Bank, and ING would be a seller. Yesterday, the terms of the block deal did indicate that it will be at a 5% discount, up to 5% discount was offered by ING, and the stake, according to the term sheet, to be sold was 1.21%, with an option to upscale the offer if there was higher institutional response. What we gathered from sources post the block deal which were involved in the transaction is that ING Group might have sold entire a little over 3% stake in Kotak Mahindra Bank, since there was a strong appetite from institutional investors for Kotak Mahindra paper. And probably, in the morning at 9:15, we saw nearly 7.5 crore shares plus got traded, which is almost equivalent of 3% equity. And as of December 31st, ING Group held 3.06% stake, which means that more or less it's given that ING Group would have fully exited from the investment in Kotak Mahindra Bank. Remember, during the merger between ING Vysya Bank and Kotak Bank, probably in 2016 end, we had ING Group which got 6.5% stake in lieu of their holding in ING Vysya Bank. So, it seems that ING Group would have exited 3% stake in the company, given the fact that they had been selling it gradually and wanted to exit the entire investment.
Okay. Watch out for that. Remember, Yatin broke this story yesterday. The stock amongst the principal losers in the session today. On the sidelines of the Aero India show, there has been a large flow of defense orders and partnerships for various companies, and most defense companies are buzzing in today's session. Sharad Dubey is here with the details. Sharad.
Yes, Neeraj, I think the Josh is really high here, with Bharat Electronics up almost 2%, highest in the third trading session, as the company has signed a teaming agreement with Hughes India for satellite communications for helicopter solutions. Apart from this, the company has also signed an MOU with JSR Dynamics for manufacturing and sale of glide weapons and lightweight cruise missiles. We have another PSU company coming up with an order of BML, which is up almost 4%. It's highest in 3 trading sessions after it had signed a certificate of partnership with Lockheed Martin's Aeronautics. The press release stated that both companies will be looking to explore manufacturing of support equipment opportunities in aerospace. And today, Neeraj, is the last day, business day, so we can expect more orders coming in from the Aero Show. Back to you.
All right, Sharad, thanks very much for that. So a close eye out on most of these defense stocks. And the other focal point is going to be some of these life insurers. UBS has initiated coverage for 4 life insurance companies. Darshan Mehta, he's joining us with the details. Darshan, what are the key drivers behind this initiation?
Yeah, so I think a lot of insurance companies are finding focus. Yesterday, you had Investec coming out on the general insurance theme. Today, UBS, even IIFL came out with a note on same company. So we'll talk about the UBS report. 4 companies that they've initiated. First of all, it's HDFC Life. Target price is 390. ICICI ICICI Pru target price of 400, Max Financial target price of 425, and SBI Life is 740. So the only one they have neutral is Max Financial and HDFC. The other two stocks are a buy. What they're saying is they are positive because of the rising penetration of term insurance and protection products. They say that Indians use insurance more as an investment product with tax incentives, and the upside potential from protection market is underappreciated by the markets at this point of time. Valuations for both ICICI Prudential and SBI Life are attractive at this point of time. HDFC Life runs a high quality business with focus on profitability, but valuations seem to be something that they are concerned about. And Max Financial, the only concern that they have is that they face risk losing of its largest distributor. So that's the theme on insurance that they've spoken about.
Right. Darshan, thanks very much for that. All life insurers in focus today. The other one is Venky's that we're going to be talking about, which has registered a cumulative 14% revenue growth for FY19 so far. In Q3, revenue grew over 16%. At this rate, the company may post a healthy growth in Q4 as well. But is it sustainable? Agam Vakil had a chance to chat with the Joint Managing Director, Mr. Venkatesh Rao, and he started off by asking him about projections for FY20. Listen in.
I think poultry as such is a little difficult to talk about the profitability, but still looking at the last quarter, which is last quarter didn't go good. Then the last quarter a little bit picked up, but next 1 or 2, it depends on the rains, and then soya and maize being the raw material main of the poultry feed or whatever. And basically, if you see that next 2 years look, it depends totally on the expansion plans, not only us, but the entire industry. If they grow particularly 10% and 8% in broiler and layers, that would be the benchmark. And plus, geographically, if you also spread out evenly, I'm talking to all the players in this industry and who need to, and this impacts the whole industry actually. So basically, if you can also, it depends mainly on the crops. I've been always emphasizing on that. And I think the interest levels of Venky's also is going down. So naturally, it will show on the bottom line. But if next 2 years, according to the expansion plans, the SPF and whatever the oil seed plants coming up, naturally there will be a growth. And I think it will more or less will be stable. And I expect another 3 to 4% or 5% growth in the last quarter of this year.
Okay, sir. So based on what you've told us about your expansion plans, if we consider only FY20, what are the areas that are going to contribute to growth? And I know that you have addressed to a certain extent your poultry business and your animal feed business as well. But which of these do you think that should outshine and outperform?
Sir, I think because of basically the SPF technology, SPFX, which are getting exported in India also, the utilization is going up, and abroad also the utilization is going up because of the yield and the quality, of course. But we've got a unit in America also, but it's nothing to do with Venky's. But as far as we are exporting from India, the SPF projects which are under Venky's India, these are having doubling the capacity, and naturally the bottom line will go up according to the volume of the capacity is going up, and basically the human consumption, the human vaccine manufacturers also increasing the demand towards the quality, and to from Southeast Asia, you ask Malaysia, you ask Indonesia, and different institutes and multinationals and vaccine manufacturers, either the chicken or the vaccine, the demand is going every 5% to 6% high on the SPF. So I feel a total there will be a nice growth on that front. Maybe even you don't be surprised if it surpasses all this partly.
All right. So over the past few quarters, what we've also seen is increase in volumes when it comes to broiler as well as day-old chicks. The question really is that if volumes are going up, what happens to realizations based on the kind of pricing environment at this point in time? How are you reading trends here?
First of all, the rains, sir. Secondly, nothing should happen to maize. Last time the army bomb in South India came and destroyed 15 to 20% of the production. Then I think government schemes which have been introduced, small schemes, they have to encourage more and more. Cultivation has to be encouraged, and basically a farmer needs to get a better price. Middleman has to be controlled. So all these parameters are there, but still coming to your question, if I have a good yield on maize and soya, then naturally my cost will be arrested in the production cost. One. Secondly, it depends on totally on the expansion also, and what kind of expansion the individual big or small farmers are going to do in this layer industry and broiler industry. Because the parameter of 10 and 8% per annum, then okay, we're going to have good. And festival season is also coming. So when it comes, of course, after 3 months, that is a little bit of a lower time for the poultry, and the consumption goes down. But on the other hand, if you see the protein awareness is coming up, so there's a percentage of 3 to 4% of growth because of this protein awareness. So the naturally chicken is consumed more, per capita is going up. So per capita is going up from 3, 4, 5, 6, it has come to 9 per capita now. So I expect that multinationals are consuming good amount of poultry. So all this encouragement is coming and coming, and of course everybody is expanding, maybe 6%, maybe 7%. In the broiler is about 8%, in layer it is about 6%. 34 crores per month the replacement of broiler, and 2 crores approximately per replacement for the layer will go up by maybe a few percent. So I think that's it.
Okay. So you also just mentioned about expansion plans in the oilseeds business, and as you mentioned, and which has come through your release in 2018 as well. We've also seen a rise in oilseed prices on a year-on-year basis. My question here is then to do with outlook in this particular segment of your business. What can we expect going in?
Of course, we are having our production plans, upgrading doubling our capacity. There's one more plant coming in the north. We are tracing it out, how fast we can come out with the oil seed I'm talking about. This year, I think the cultivation was more also, and the yield was about 6 to 7% more. But then the soya prices are not coming down, because I think the consumption is very high, and on the other hand, if you see, it is I think 36, 37 rupees per kilo now. So, and plus this American pressure is there of I think with Iran, and Iran is trying to pick up from India, and then China will join very soon. I think if the pressure tactics go on. So they have some ties with the Brazilian companies to make this soya. So naturally some of our plants are picking up heavily, not we only, but the entire industry for export. So naturally the common man or the common manufacturers will get affected with the rate. So all these parameters, there are so many various points to this. So we have to meticulously manage one by one.
Okay, so just two more questions then. I also want to know about the product launches or the areas in which you are going to launch newer products as we move into the next 1 or 2 quarters. What can we expect in the range?
I think we are expanding in layers as the parameters are there. We are expanding in the broilers as the parameters are there. In our SPF technology, we are expanding our productions. We are expanding our soybean units also, and vegetable oil plant also is coming into action. So all these parameters, plus we have some next year we have some plans which I don't want to relieve right now. They're in just talking stages, so it will be very immature. I mean, too early to talk about the expansion plans. But otherwise, everything is looking very, very good ahead of the technology. What we are following and the manpower what we are looking into is extremely. I would be proud enough to tell you that we are looking very positive for the next 3 years.
All right. So, and just one question where there is a lot of interest in the whey protein market in general. And I know that this particular business doesn't contribute as much to your revenues, but still we'd like to know a little more about how the market looks like and what plans you have in the whey protein area.
Sir, good question, because of again the protein, the doctors, and then nowadays even the gyms, and there's so much of activity going on, and various multinationals are competing with us, and there's every month there is a new company coming up, and I think day by day it is going up. There's a growth, of course, but unfortunately we are not done so good in that. But of course we are slowly picking up, because we are learning the business. We are also learning it in distribution. We are making it strong in our network. system, and of course we are thinking to introduce few new products also, but again it's in a very small way, and hardly I think 2 to 3% is the growth per annum there. But the quality and the product, and of course the overall requirement of the market is huge. But we are studying the market. We want to be more strong. We want to strengthen ourselves, and I think, and then come back in the marketing area, and then come back in the production line. Basically, we are a little bit slow in that area, to tell you honestly.
Well, that's Venky's and the business outlook thereof. Outlook from one more company, Mphasis, which aspires to grow faster than the industry going into FY20. That's the word coming in from its CEO, Nitin Rakesh. Speaking to Ridhima Saxena, Rakesh also laid out the company's plan to ride the digital wave. Listen into a slice of that conversation.
I think the way I see it is there are two things. One, there's more information given through the survey than just one metric. Two, I think there is a clear sense of transitionary mindset, in the sense that what got us here won't get us further, from the point of view of the fact that the demand from enterprise clients is shifting away from being traditional technology providers to helping them apply transformation using new technology. So what's become more relevant is, the metric around, how are we doing in applying that digital transformation, so to speak. So I think that's the way I see the shift. Obviously, it's a bit of a philosophical shift, but more importantly, it is also the ability to give more color where the trends are, what is the sentiment of the industry beyond just one number. I mean, you can easily bifurcate that into a number if you would like.
You are the CEO of a fast-growing IT company, although there was no guidance from the NASSCOM. But what is your view? Given the uncertainties, especially on the global side with the US-China trade war and the Brexit decision still pending, do you see a high single-digit growth achievable? I think,
again, we were actually a little further ahead. We stopped giving guidance. We never gave guidance as a business. So but I can tell you there are three things that are important to us right now. Firstly, it's well recognized and understood that every business is turning into a digital business. The mega trend of enterprises using technology to connect with consumers, using analytics and data, embracing all things that give them agility to launch product faster, I think that mega trend is only gathering pace. And my favorite saying is we are probably in the second or third innings of a baseball game when it comes to really embracing technology, especially for enterprises. What that means is there's a very strong backdrop of, if you have the right service offerings, to find growth.
Absolutely.
Right?
And
so from that perspective, I think we are fairly confident that we can continue to grow what we used to call above market. And if the market's high single digit, my inference from the NASSCOM numbers is market seems to be high single digits. I think we should be able to continuously focusing on beating that benchmark. So do we foresee a scenario where we aspire for a healthy double-digit growth? Do we foresee a scenario where we have the ability to apply the operating leverage and continue to focus on expanding our profitability profile? The answer is yes.
So give me an example of how Mphasis plans to ride the digital wave then. And like you said, there's a lot of automation focused towards digital services, cloud computing. I think
we've made it really simple, both for ourselves, and then hence it makes it simpler for our clients as well. If you look at most traditional enterprises, traditional meaning if they've been in business for 30, 40, 50, 100 years, the way they embrace technology over the last 30, 40 years, since computerization became the main trend, was to take an existing business process, apply software and automate it and scale it. Take the example of core banking. There used to be, GL registers. There used to be trial balances that were manual. If you go to the Museum of Finance, you'll still see them. Or the example of insurance. There was a policy register, which was manual, physically kept. There was a claims register. What we did was we turned all of that into database-driven automated records, and then we applied workflow to run transactions. But nothing fundamentally changed in the way they did business. And of course, new channels came up. It went from branches to phone to internet. But something fundamentally shifted in the last 5 years. And the fundamental shift really was the emergence of the appification of the world. Everything became an app. Everybody wants to deal with you on their terms and at their time. They want the experience that they get from the digital native companies. So one big area of focus for us is how do we help enterprises make this transformation from being driven by large monolithic back office systems and operations to being more nimble and consumer facing. Right? And that transformation requires a lot of technological interventions, both in the way they run the back office to make it more efficient, to shrink that, to release efficiency and use that to deploy technology outside of the back office in consumer facing applications or use of data and analytics. And the drive towards consumer, every business is a consumer business or consumerism really means that I should be able to know my consumer so well that I can predict which consumer will need what product or service and target that product and service towards them. That's really what we are calling digital transformation. And if we can enable that using new technologies, using all things automation, so we call it cloud native, cognitive first approach, we should apply these two fundamental technologies to everything we do.
How have then the spending shifted from legacy services to digital? I mean, if you can help us understand over the years, how much did you used to spend on legacy versus how much is the spending on digital now?
We won't spend, we will generate revenue from it. So the way to look about it is our investment is probably equal in both applying service transformation to core and building capabilities outside of the core. But almost half of our revenue today is generated from new gen services, which basically means, and if our company is growing in double digits and the new gen services are growing, let's say between 30 to 40%, that basically tells you that the core is actually not growing, it's shrinking. Which basically means that we are cannibalizing some of it, we are transforming some of it, and that's kind of what the way to look at the industry transition also is. What's more relevant is how are you doing in the new services and applying that to transform old IT. And I think for us, a very important metric is to track what percentage of our new wins are coming in new services. And that number for us is now consistently close to 80% over the last 8 quarters.
Well, from Venky's to Mphasis to a consumer name, Bata. Let's put the spotlight on Bata. It's seen a rapid surge from the lows in 2018. It's riding or trading at close to life highs today. And quite spectacular, the move that we've seen in Bata. And for a variety of reasons, Devina. This 90% surge in the chart will come up on the screen, which will show that. A variety of reasons which are leading the stock to do this.
Well, you've seen Q3 numbers and there's been a real improvement. Revenues have grown about 16% and the prospects for the future with their focus on premiumization, youth, they've got brands like Bubble Gummers, which is really doing well for them. So all those factors put together, they're having their cost control measures. Rent as a percentage of total expenses is likely to move lower because of the franchise model. So all of those factors, keeping that in mind, even at these valuations, analysts are pretty optimistic on the prospects of Bata, even at this point. And a revenue and earnings CAGR from FY 18 to 21 of between 13.5 and 26% is a strong show.
It is. In fact, let's try and tell our viewers what happened in Q3 and what the way ahead could be like as well. So, firstly, what happened in Q3 in terms of the results? Devina speaking about margins, and I think multiple things. One, the positive margin surprise in Q3, 450 basis points. And I think a large part of it because of volume discount from suppliers, which aided the gross margins. I think there was a 350 basis points gross margin expansion, largely aided by this. And the retail revenue growth of 18%, which as I read was higher than what the average for the past few quarters has been, 18%, which constitutes about 85% of the sales. Quite spectacular what they did on the retail revenues as well. And then a bunch of other things working for the company. Yeah,
like I highlighted. So there are a lot of aspects that you're going to keep in mind when you're looking at Bata as a stock, even going forward. Like I said, premiumization, they focus on premiumization. 4 things that are working for Bata currently that will take the next leg of growth for them. Global and local leadership change, that's what's going to be the changing point. The focus has changed. Their priorities in terms of what they're going to be focusing on. They're looking at brand recognition, focusing on that. So their digital spend is going up. They've got celebrity endorsements going on. So all those factors put together, they're looking to enhance the in-store experiences as well. That will work well for them. Yeah, and they are discontinuing some key non-profitable products as well, which will probably aid the margin expansion going ahead. So that was the other key point. Store expansion in both the company-owned and the franchisee model, that is which will help bring down the rent aspect of it also and build up a little bit favorably on the cost side. Yeah, and then the point that you were making, focus on premiumization.
I think, which is also working very well.
Yeah, and they've got like a different, sub-brands coming in. So they have different pockets catering to different strata and different, I would say, subsets of groups of people. So you have the children's segment, then you have the youth segment, and then you have these premium shoes and for women's. They're focusing on the women's section as well. So a lot of different things that they are undertaking, which will work really well for them.
Yeah. Lastly, if you can just pull up how the trading statistics for Bata are. One, that is going up and going up on fairly high volumes. As you can see, the blue line and the white line, that's the volume line, and both those lines have been doing rather well for themselves. So good price and volume action in Bata even in today's session. And if you can get back to the graphic dashboard and then the analyst recommendations too, this is the block. 9 buy calls, 3 hold calls, and 1 sell call. The analyst community is very, very bullish on Bata.
And you can see, I mean, they've just been going higher in terms of the target prices as well for the analyst community. I think most of the consensus prices somewhere hovering around 1400 to 1450.
Yeah, a lot of the recent reports have certainly been that. Yeah, you're right. And which is what I think this shows. This yellow line is the target price line and how that's consistently moved up, and the blocks have only gone up higher. So both the current market price as well as the target price is moving higher. It's not putting a wrong foot.
Yeah, that's Bata for you.
That's Bata for you. Okay, let's, well, on that note, let's get in our experts on board to try and talk about what to do for the markets and on specific stocks as well. Amar, since we're on the topic of Bata, let's start off with that. Stock clocking in new highs today. Before we get a market perspective, a quick thought on Bata India?
Yeah, I would say very good afternoon. I would say that Bata India, if you look at the charts, technically, Bata India continues to be extremely strong across all different time frames, be it the monthly or the weekly or the daily charts. And in spite of being overbought zone, the stock continues to rally. And today also there has been a decent rally in the stock after consolidating for almost, if you look for the last 5-6 trading sessions. So 1250, 1260, it has bounced back from there, and definitely it's the way the stock has taken off on the upside. I would say 1340 to 1345 could be an immediate level of target for Bata, whereas support for the stock is somewhere around now 1250, 1260 zone is an immediate level of support for Bata.
Okay. So that's Bata for you, and fundamentally, technically, seems to be doing okay for itself. Let's talk about the markets at large and then some stock ideas from both our experts. Shubham Agarwal of Consap also with us on the show. Shubham, good afternoon to you as well. Let's start off with the index strategy for the day. What is it that you'll be doing on a day which is very, very flat?
Hi, good afternoon. If you look at the index movement, we can clearly see that the broader index or the broader view of the market has been oscillating for quite some time. And I think ahead of the elections, if you go and look at the historical behavior of the market, it's very much expected that, the market generally remains sideways, and very close to the election, we do see a trending move coming in. So I think this broader consolidation will continue, but within that broader consolidation, we have mean reversions that is happening where 10,600, 650 is a very good support for the market, and on the upside 11,000 and higher are the resistance for the Nifty. So given that we have already seen a mean reversion happening from the lower level, I think this move should continue, and the next target on the Nifty could be 10,950. So my recommendation here would be to go long on Nifty, and yesterday's low, which is 10,730, can now be taken as a stop loss, and overall the market trend remains positive. So I think Nifty is quite positively placed. 10,950 should be the next target.
Okay. What about your index thoughts, Amar? What would you be doing?
I would say that looking at the index, I would say looking at Nifty, what we're seeing is that Nifty has bounced back. So somewhere around 10,580, 10,620, that's a very strong support zone for Nifty. However, on the upside, I would say around 10,820, 850, that's a very strong resistance zone for Nifty as well. Now, coming to the monthly charts, I see on the monthly charts there is bearish divergence on the chart, so clearly reflecting that higher levels will definitely be sold into a Nifty. And only taking out 10,850 decisively and consistently breaching above that level could only lead to some meaningful rally towards 10,950 odd levels. And also, if I look at the weekly charts are also clearly displaying that it's in a no man's land. It's sideways consolidation which is happening in Nifty. So I would be slightly cautious on the buy side, and if I buy, then definitely I'll wait for up move above 10,850 at least, 10,830, 850 zone, because that's where profit booking is going to happen in this market.
Okay. What about specific stocks? Shubham, I'll come to you first. Your stock-specific recommendations for the afternoon?
Yeah, so I have two recommendations, one on the long and one on the short side. So I'll first start with the short idea. So the short idea is on Tata Steel, and if you look at the overall metal pack, we have seen that the entire metal pack was there in a downtrend, and then we saw a temporary pullback happening in place. And now most of these stocks are trading around the call resistance. And normally, according to the derivative data, the study that we do, whenever the trend is down, whenever the stock approaches to the call resistance is the time to go and take a trade on the short side. So Tata Steel is a sell, but I would like to deploy an option strategy rather than going and shorting futures. Now, because it is the expiry week, so the recommendation would be to take a bear put spread so that the theta decay is slightly in control. 490 put can be bought and 480 put can be sold. The net spread that is there is around 2.25, and I am looking for a target spread of 6 rupees and a stop loss of 0. So 490, 480 bear put spread on Tata Steel. And the second strategy is a bullish strategy on Axis Bank. A couple of days back, we saw that most of the private banking names have started seeing some long build-ups, and ICICI Bank was one of the early participants, and the next move, I think, can be in Axis Bank. So bull call spread can be deployed on Axis Bank as well. 710 call can be bought. Simultaneously, we have to sell a 730 call. The net spread is at 4 rupees 15 paise. The target for the overall spread will be 12 rupees and a stop loss of 0. So Axis Bank is a buy and Tata Steel is a sell.
Right. Okay. Let's get stock strategies from Amar Singh as well. Amar, what are your stock strategies?
Yeah, I would say there are two calls, one on the buy and the other on the sell. The buy is on Maruti. Now, what we're seeing on Maruti is that Maruti is now continuing to consolidate. And after making a low of almost 6,400 levels, it bounced back to 72. Again, currently it's around 69 odd levels, 6,900 levels. So somewhere or there is some bullish divergence on the charts, and also it is very close to its crucial support zone. So there is a possibility of a pullback. So one can look at Maruti and somewhere around 6,875 levels with a stop loss of 6,709 and a target of 7,195 on the upside. And the second stock to look at is ITC. So ITC, if we look at it, the stock continues to trade lower. It did consolidate and it continues to consolidate, but higher levels are not being able to, the stock is not able to sustain. And technically also, if you look at it, the weekly charts, the monthly charts, they really don't inspire much of a confidence in terms of being on the buy side. And even the daily charts are clearly showing that it is edging lower towards its crucial support zone. So I would say that one could go short in ITC. Any pullback towards 276, 278 level can be used as a shorting opportunity with a stop loss of 285.4 and a target of 261 in the short term.
Sure, got that. Shubham, leaving aside a Reliance Intra and RCom, what would you do with the Reliance Capital and RNAM?
So if you look at most of these stocks, very clearly it's a kind of a dead cat bounce that we are seeing in most of these structures, where the overall trend has not just recently because of the breakdown, but if you see the overall long-term movement, these stocks have been there on a perpetual short list since ever. So I think a pullback which has been very healthy, because approximately after hitting the low of around 105, 110, now we see that Reliance Capital is trading at around 166. I think all the investors that are trapped should not look to bottom this list. And in fact, if anyone is holding this stocks, my recommendation would clearly be to exit and look for some better quality name where the clarity is more and you can make money with a limited risk. So my recommendation on all of these stocks will be that use this opportunity to exit, and one should not be looking for any fresh trading idea.
Okay. Well, let's get a fundamental voice on the show as well. Anand Tandon, market expert, with us with his thoughts. Anand, good having you. Thanks so much for joining in. These last 2 days of the bounce that we've seen has brought about a reasonable bounce in the beaten down large caps as well. First, a take on some of those commodity backed names, the Vedantas, the ONGCs, the oil marketing companies, all of them have had a lead and stretched that lead for the last few days. Is this a dead cat bounce, or would you reckon that people hunted for some value here?
Well, it's difficult to find value in commodities. It's finally a trading play, right? You have to basically try and time the cycle. And obviously, at the top of the cycle, you sell, at the bottom, you try and buy. But the question is that, is this the bottom fundamentally or only in terms of the stock price? And I would argue that I don't see much in terms of being able to forecast that there will be actually a sustained price and demand increase in commodities, given whatever we are looking at in terms of industrial growth going forward, both in the domestic market as well as internationally. So from a price point of view, it may continue to go up, but I'm a little more skeptical when it comes to the fundamentals of why they should sustain. On the other hand, I think what we are looking at, besides the fact that the market's been going up on the index, is the fact that the broader market has done quite well. And it does look like that finally there is some value buying there, because the broader market had fallen off a cliff, and there are fairly interesting companies out there which have actually become relatively cheap and have still got some kind of sustained earnings growth. So at this stage, I would argue that if you are bullish on the market, you should be looking at the mid cap and small cap.
Interesting. Well, I don't hear these things from you generally, Anand. The last few times that we've spoken, you've been more circumspect than bullish. Are you not on a relative basis, but on an absolute basis, bullish on the mid cap and the small cap end?
Well, I think, barring aside any accidents in terms of liquidity that may create a further problem, I think many of the companies do seem to have reached a valuation which is justifiable in terms of buying with adequate margin of safety. So yes, I think I am on an absolute term suggesting that someone with a 2-3 year time frame should be looking at buying these companies now. Of course, you have to remember that you could get another shock, because if there is any kind of liquidity constraint, the first companies that get hit are the mid cap and small cap. But at this stage, the people who wanted to exit have probably done so already, and there may not be that much selling aside from a high volatility day where you may find somebody comes and sells a few shares, and because of lack of liquidity, the share makes a new bottom.
Okay, we're seeing some interesting moves the last few days. A lot of these beaten down stocks have seen a bump up that we spoke about in today's session. For example, just before I take the next question is Anand, Suzlon and Inox Wind, both of them are up and about. Suzlon up 22%, Inox Wind about 15%. GVK Power on that news about some newspaper report about how there might be a stake sale in the airports business. That's a tiny tune, but up about 19.5%. The last few days, HCL Info has had a good move, and on the back of, I would reckon on the back of the news that came out about Arnam and how Reliance Capital and Reliance Nippon Asset Management went up, I think the others in the group too, the likes of Reliance Naval, Reliance Infra, etc., have all done really well for themselves the last few days. Anand, are you buying distress at slightly better than distressed prices right now because all the stocks have moved up, or are you buying or looking at buying fundamentally good stocks which had a temporary pullback? They may not be as cheap as what some of the distressed names were looking like. Where are you looking to buy?
I think we are not out of the woods yet as far as distress is concerned, because I think the debt market is still not showing any signs of easing off. And we've had recent commentary from the leaders in the banking sector saying that they are unable to reduce or pass on any reduction in interest rates given where we are, and as well as the fact that yesterday the Provident Fund fellows put up increased the rate of return. So that automatically kind of puts a floor as to where you are doing, what you're doing with your savings banks and fixed deposits kind of rates, which means you cannot actually reduce the lending rate. So companies which are stressed in terms of debt, I would still stay away from. However, I think there are, look at pharma, for example. Among the mid cap and small cap pharma, they've literally been decimated. Even the large cap hasn't done all that much. If you look at fine chemicals, for example, that is another space where many companies have actually fallen off a cliff. Those are long-term stories where there is a reason to believe that it's not just a one-season kind of upside. So both IT, pharma, fine chemicals, and export-oriented companies look quite attractive. On the domestic side also, I think, if you were to just look at, let's say, a 1 year time frame, then some of the rural players will again start to look reasonably attractive.
Okay. Anand, oil marketing companies and they are up and about despite crude not showing any kind of a fall. My question to you is, do they provide a good bang for the buck? And is that view dependent on what crude prices do or independent of that?
Well, it's dependent on what crude does and what the government does. So far, if the government were to step back in again, and that is what really caused the shock, because people had kind of penciled in an assumption that the government will stay away, which is kind of naive in my view, because all said and done, beyond a certain level, they have to come back and do stuff about trying to keep the oil prices under control. So for the moment, they are in a relative sweet spot, and therefore you could have a trading buy. I refuse to believe that they should be treated as retail players and so on. If you want, you should be looking at retail companies directly, which are privately controlled, rather than looking at government companies. In effect, what I'm saying is you cannot trust the government companies to give you any kind of sustained upside. You have to continue to look at them only as tactical buys and sells.
Okay. Anand, so let me ask you, when you're looking at these stories at the broader end of the spectrum, are you more bottoms up, or are there, while you may be bottoms up and everybody would be, but are there definitive themes to which a larger portion of the probable bets are belonging to? Any sectors, any themes that are looking particularly attractive?
So as I mentioned already, the export-oriented theme to my mind is where you have the maximum safety, both in terms of the size of the opportunity as well as the valuations for the moment. And of course, at some stage, the rupee is not going to strengthen from here in any significant way, and therefore, that's not a danger. In fact, you may get some tailwinds if it weakens slightly from here. The domestic market, given where we are in terms of the politics as well as the fiscal deficit, etc., the likelihood that you will get any strong revival in terms of growth is not likely to happen. Therefore, the only area that we are looking at is again the corporate-facing banks, which is an argument we've been making for a while, that and of course, which is now a consensus argument, that probably the worst is over, and therefore most of the earnings that you're penciling in for the next 12 to 18 months or even longer is the fact that the corporate-facing banks will recover back to at least their normative level of earnings, because they will be leaving out the kind of they will have lower credit costs than they have faced in the past. And that will increase your Sensex earnings quite substantially. So the corporate-facing banks are probably the best way to play the domestic market themes. The only other area where I think there is some likelihood that you may get some growth is probably cement, where despite the fact that we have a bit of overcapacity and therefore returns have been late to come. As we go further and hopefully as less capacity comes on, as the demand and the demand continues growing at a faster rate, somewhere the margins will also go up along with volumes. We've seen volumes go up but not the margin, or the margins go up but not the volume. I think in the next 12 to 18 months you'll probably find a situation where you'll have both, and therefore you may get some value pickup from there as well. There are of course many smaller companies, but those don't fall necessarily into any sectoral theme.
Okay, we leave it at that, Anand. Thank you so very much for joining us this afternoon with your thoughts. Anand Tandon there. Shubham, just quickly comment on the likes of an Edelweiss, IIFL, if you have a call on any of these.
If you look at most of these broking company names, what we have seen is that the trend is very, very clearly negative. And within that negative trend, a recent pullback has again happened. But I think the pressure on these stocks will remain. And if you look at the overall market, the market has been consolidating for quite some time. And in a general environment like this, the hit to these companies are generally high. So I think in the near term, I don't expect these stocks to perform or do well. In fact, the pullback that has come now, where most of the stocks have seen a rally of about 15-20%, I think that should be used as an exit opportunity. And again, the previous lows can get retested. Now, because these are not the names in F&O, so we cannot go short, but at least on the cash market, my recommendation would clearly be that if anyone is holding these companies, a good pullback has happened, look to book profit or exit from your portfolio.
All right, a big move coming on a stock like Take Solutions. It's at about 114 right now. Inox Wind 2 is up about 14%, trading at 72. So both these stocks looking strong. Magma FinCorp is up 7.5%, and a Motherson Sumi trades at 144, which too is up about 6.5% right now. Amit, Amar, what would you do with Motherson Sumi?
Yeah, looking at Motherson Sumi, I would say that the stock has definitely bounced back, and technically on the charts, the stock has the potential to rally towards 150, 155 levels. And on the weekly charts, the stock has displayed bullish divergence. So that means that the bottom definitely has been made. But again, as I said, 145, 150, that's a crucial zone of resistance. So those who are long, they should ideally look at booking profits around 145, 150 levels, because the long-term trend for the stock still remains extremely bearish. So the stock could go in for some consolidation from higher levels, that is from 150 levels.
Okay, watch out Motherson Sumi. That one has bounced from 130 odd levels all the way to 144. Not that the other auto anchors have done that. Not every auto anchor has done it, but Motherson Sumi certainly has been right up there, gaining some gains. Some of the metal names, by the way, in the last few minutes have done rather well for themselves. JSW Steel is now trading, I reckon, at the day's highs, and it's gained a little bit in the last 30 odd minutes of trade as well, so up about 2.8%, so good going for that one. Adani Enterprises is up and about, so doing rather well for itself. And Welspun Corp has gained even more from where it was, now up about 5%, but yeah, some strong gains into some of these names for sure. Let's talk about the chart of the day now. Indian banks have been in the news for years, unfortunately, mostly for the wrong reasons, be it the NPMNS and regulatory obstacles or something else. It's been a very topsy-turvy ride, but the future looks better. At least that's what the analysts are suggesting, right, Nikki?
That's quite a good intro, I would say, Neeraj. Well, financials clearly are expected to drive the earning growth of Nifty for at least the next 2 years. If you look at the Bloomberg consensus estimates and the data that we've compiled out of it in terms of the profitability CAGR, banks are 4 out of 5 companies of the Nifty 50 companies. Top of them, if you'd see, 4 of them are actually banks which are expected to deliver good profitability over the next 2 years, given that the profit CAGR from FY19 to FY20 is the highest for all of them. But then if you look at this first one, Tata Motors occupies the first spot at a humongous number of around 2,400% kind of a profit. But that's mainly coming on account of the lower base, since the Bloomberg consensus estimates the company to only turn around in this financial year. So based on that low base, we're expecting that kind of number there. But then if you look at the last 4, the other 4, State Bank of India, ICICI Bank and Axis, there you would expect a profit CAGR anywhere between the range of around 37% to 164%. So it's revival of credit along with the moderation in slippages and reduction in total stress loans, which is expected to drive the growth of the banking sector as a whole. Notably, if you look at all the Bloomberg consensus estimate and the analysts which are tracking the stock, most of these 4 stocks have more than 70% of buy recommendation on them.
Oh, that's quite interesting. Nikki, thanks for putting that into perspective. So, well, watch out for the banking names if you're buying. And if you have an SIP, don't be too worried. Systematic plans, investment plans may be falling out of favor for some of the retail investors in India, because the Amphi data collated by Cafe Mutual and some other sites suggest that the new SIP registrations have fallen significantly over the past couple of months. Let's just give you a quick snapshot here. We've already spoken about this twice today, but for the people who are tuning in right now and don't quite know, this is what's happened. New registrations, which is the blue bars, and the SIPs discontinued, which is the yellow bars. The reason why it's becoming slightly important is because there's a confluence of sorts. The new registrations are coming off and the discontinuations are moving up, and as a result of which the net number has come off. And the next bar, which the next charts will come up on the screen, which will show you that half the live SIPs for every single month, and the December number is looking fairly wobbly. It's not that it's not happened in the past, but after the averages that we've seen in the last few months, this number is a bit disconcerting. It does not suggest a trend necessarily, but the question mark in a lot of people's mind would be that could this be the start of a trend? That is what you've got to ask. Now, there are 2 factors, both of which difficult to say if they'll go away. One, the Aadhaar-based KYC norms have been changed to full KYC. Now, this is something that's a norm. It has happened. It's not going away. And AMCs are finding it difficult to get in the lower strata of customers onto their fold. People which were coming in very, very easily with just a click of an OTP have now to go to 6-step process. And a lot of people are not quite going ahead and doing that. At least that's what the AMC's data is suggesting. Today we were speaking to the AMCs and they suggested that too. Two, market volatility, because just very few SIPs gave positive XIRR returns in 2018, and that's the other bit that shouldn't work well for that doesn't work well for a lot of customers, because they do not like to see their investments in the red. And frankly, if you just look at 2018, a lot of SIPs XIRR returns, which is the apt returns for SIPs, are in the red. And I'll get to that data in a bit. Just one point of caveat out here is that we moved from average monthly flows of close to 4,700, 4,800 or 5,000 in 2017, better part 2017, to about 8,000 crores. So even if there was a bit of a dip, if it comes about, it shouldn't be read as a point of calamity. That's the key thing that you got to keep in mind. However, as most people would say, and as the point that I was making, one, that 2018 has not been a great year for a lot of SIPs, namely these three. These are amongst the worst performing SIP returns in 2018. But hey, if you stretch that period out a little bit, look at what DSP small cap has done over a 10-year period. This is after the 21% reduction. This fund XIR returns are about 19.57%. Compare that to the XIR returns over a 10-year period for some of the others, and the best performing SIPs will now come up on your screen out here on this chart. So Axis long-term, Axis blue chip, UTI equity, they are the best performing SIPs in 2018. But the 10-year performance is good, not as impressive as DSP. So there is no saying that what's done poorly in 2018 might necessarily continue to do poorly in 2019 as well. So don't get disturbed if your one-year returns are not looking all that great. Things might change going ahead. We caught up with Radhika Gupta of Edelweiss and Kalpen Parekh of DSP Investment Managers earlier today. They too believe that the dip in SIP registrations have got to do with market sentiment and certain changes in regulations. Hear out what they had to say.
There are three reasons why systematic investment plan numbers have dipped off a little bit. One is, I think, more business as usual, and two are, a little bit of what's happened in the last few months. One is, of course, systematic investment plans grew very popular, and a lot of investors entered over the last 1.5 years. Now, because equity market performance has been relatively patchy, especially in the mid and small cap segment, and a lot of SIPs do happen in mid cap funds or, multi-cap funds, people are seeing 1 year negative returns on systematic investment plans. So for first time investors, that makes them a little bit jittery, and hence you don't have as many new investors coming into systematic investment plans. You have a couple of people also potentially withdrawing. So that's something that is expected in these kind of market conditions, although it's not something one recommends or it's not something that is ideal, but it is something that can happen. Two other things have also, of course, happened, frankly, over the last 6 months. And one is a change in incentive structure for distributors selling systematic investment plans. That would have had some impact, and that's something we can't take away from. And then the second, to a smaller extent, is the impact of not allowing Aadhaar to be used as a form of KYC. So that will impact some of the online players. So two of these things are a little bit driven by regulatory changes, and I think they were expected. The first is, of course, market conditions, but that I think will normalize with markets getting a little bit better.
I think Radhika's first point, Kalpen, about the KYC norms change and the impact that it has on online players. Now, I was speaking to a couple of online brokers, and without giving me numbers, which they wouldn't, they did say that they are facing some dip in the online registrations. The mass market, the bottom end of the market, which was getting in at 50,000 rupees without minimum KYC, is now facing issues. Have you heard of the same? Are you facing that in your direct subscriptions as well? And is this something that will change? People get attuned to a new norm, and at some point of time, they'll come back to a good product.
Yeah, I think the product universally has been good for decades. It got relevance in the last few years because everyone started speaking about it. And it became a part of even analyst reports, making a case that why the India equity story will have more depth, because there is a block of $1 billion coming in every month, which is counterbalancing FII. So SIPs never got this type of recognition in narratives till now. These dips are seasonal, and the two seasonalities are, one is regulation and primarily the operational inconvenience now with Aadhaar not being allowed. So that is the reason why the dip has happened for digital players, our online subscriptions across the industry, as well as the fundamental reality that human beings like last 1 or 2 year returns to look good for making future investments. Having said that, you asked a question that is it something to worry, and for an investor who has started his SIPs just 1 or 2 years back, and 90% of investors have done that because this cycle has started only 2 years back. And when they started off, they've contracted for 10, 15, 20 year SIPs. There is a 25% block of SIPs, which is a perpetual SIP, which means it can last for longer. So operationally, people have signed up for 10, 15, and 20 years. But behaviorally, people have committed only till the time returns look good.
Sure.
And the fundamental point, I think, and I'm glad that you're doing a show at this point in time to help investors appreciate. I was doing this analysis for our small cap fund, which is popular for SIPs, but also has been volatile in line with all small cap funds. In the last year, 2017, when markets were going up and NAVs were going up, an investor on an average was getting around 75 units per month. Today, he's getting 93 units per month. So there is an uptick of 22% extra units that an investor is acquiring. So from an investor's perspective, who have started off their SIPs and who still have a 5-10 year increment, which means 60 more installments to acquire, this is a great time. In fact, they should celebrate these moments and take advantage of this.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
All right, 26 minutes left to go for market closing, and looks like we've made our way back into the green marginally, though. Going to be a flattish close as of now on the index. Half an hour still left to go, so we'll wait and watch as to which direction the markets take. Bank Nifty still looking extremely weak. Onto the global markets, and Europe has opened up for trade. The FTSE, the CAC, and the DAX coming up on your screen. 1/3% higher on the CAC and DAX, and 1/4% on the FTSE 100. So slightly more positive start there off. Dow futures up about 1/3% as well. Taking a look at the turnover and the volume picture as of now, so you've got about 33, almost 34,000 crores already, which is with half an hour still left to go. So it's a big day on the cash market at least. NSE F&O turnover right now at about 4.1 odd lakh crores. So that is lower than the last few days, but the cash market definitely has picked up. Well, coming back, and let's tell you what has made it to Darshan Mehta's list of Fab 4 stocks this day. The Darshan, good afternoon.
Yeah, so first and obviously everyone's talking about the big move that's come in on Suzlon. It's up almost more than 45% in the last two trading sessions. It's up almost 25% now. Right now, CNBC TV 18 did a story in terms of an M&A activity that Vestas is looking to acquire Suzlon. There's no clarity on that, but nevertheless, it is reacting on very, very strong volume. So there is positive traction that's happening. Bata is hit another record high. Ever since the numbers came out, it's been doing well. The management commentary was strong in terms of taking advantage of the festive season, the new store, the premium collection, the celebrity endorsements, all of them doing well. That is doing well. For the second day in a row, Reliance Nippon has done well. Yesterday it was up 20%. It's up another 8% in trade today. Yesterday, Reliance Capital came out with a notification indicating that they want to exit Reliance Nippon and they're asking Nippon Life to buy their stake in the company, 42% stake. And finally, Piramal Enterprises is doing well in trades. Look at the F&O market, almost 35% open interest build up, high concentration there. There is traction there, definitely there on the positive side.
Okay, Darshan, many thanks. We will watch out for some of those stocks in the session today. Just keep in mind that while we are looking out for what some of the mid caps are doing, some of the large caps are making a serious move. The likes of IOC, for example, trading at the day's high, so really big move there. And then some mid caps in the last few minutes have had a sharp spike. The principal one that is standing out is Gateway Distriparks. Big move in the last few minutes again, and now trading about 8.5% higher. Have to get a chart check going on this first. Amar Singh, Gateway Distriparks on the charts.
Yeah, looking at this particular stock, the stock has moved up significantly, and currently it's around 112 odd levels. So it has been a very sharp up move for the stock, and if you look at it on a daily basis, the stock was consolidating somewhere around 97, 98, and then it has bounced back. So on the upside towards this is 112 is an immediate level of resistance. If that is taken out, then the stock can rally towards 118, 120 levels. On the weekly and the monthly charts, I would say the stock is moving from oversold territory. So there is a possibility that we could the bounce back could sustain. But ideally, one should look at booking profits around 117, 118 levels.
Okay. Let's wait and watch what happens here. Gateway Distriparks certainly up and about in the session today. T.S. Harihar, HRBV Client Solutions with us on the show. Hari, good having you, and thanks much for joining in. Can't not talk about the OMCs at the start, the best performing large caps. Yep. What's happening here?
I would believe some kind of short covering seems to be coming into the stocks because, ever since the crude started moving up to about $67 a barrel in the Brent market, there has been a worry that, it's a fairly bad combination. Elections are coming and crude is going over. It's not a great combination. So there have been expectations that probably there will be some amount of a one rupee subsidy on the OMCs, which I think is not happening unless the price really shoots up. So probably a lot of shorts built up. We have about 4 days to go for the final expiry. I think there is some more of short covering in the OMCs that we're seeing today.
Okay. Some of these small size names have moved up. So Suzlon up about 20 odd percent. I can imagine it's a difficult one. GVK Power on the news of Mile Airport's Adani news. Adani is up about 19% as well. Actually, almost looks like on a circuit. What do you do with some of these names? GVK Power, for example, Hari.
See, the core business of GVK has been in deep trouble and continues to be in deep trouble. Not much has happened on that. My understanding is the only way GVK can probably stay out of an NCLT reference is that they managed to hive off a stake in the Bombay airport, because I think that is worth quite a bit. So if they're able to do that, they can probably escape the NCLT route. So I wouldn't be, and once that is gone, I don't think there is much left in GVK anyway. So I wouldn't be too much of a Suzlon is a stock we've been trying to understand for the last few days, but the only worry we have is that even in the past we've come across the stories that Vestas of Denmark is taking a stake. It never really materialized. And let's not forget that Suzlon had a very large partnership with RE Power in the past, a German-based company, which I think subsequently had to be called off. So Suzlon did show a lot of promise, but I think in the last 5-6 years it has actually disappointed. Although it has made some serious efforts to reduce the debt, I think the performance has been a disappointment. So while we are definitely finding the news interesting, I'm not really sure what to make out of it, and whether to really commit funds is a very difficult call to make at this point of time.
Yes Bank now at 222, yet again up another 3% and in the last 7 days stocks moved up 31%. Is it looking like the overhang is out now and the stock could become a long-term investment play?
I think largely yes. The overhang of doubtful assets, the CEO shift, I think all that is over and done with. We've got a new CEO in place. The latest RBI report seems to at least indicate that the divergence seems to be nil, although all that has become a big controversy, but we'll leave that aside. I think what really matters is that here is a company which has a gross NPS of about 1.52%. Let's say in a worst case scenario it could be about 3%, but I think the kind of 70% price correction we saw over the last 6 months does put it in a fairly undervalued spot. So I would believe that if you're a long-term investor and willing to take some short-term pain, it's a good stock to probably get into at this point of time.
But short-term pain with regards to what, Hari? Because most of the pain seems to have already been built in.
No, it could be pure volatility. Okay. Here is a stock that went to about 160, 170 and bounced back. So you could probably test those levels again. So short-term volatility, if you have something prepared for, I think long-term this seems to be a good stock. At least the worst broadly seems to be over in the stock.
Shubham, would you be a buyer in Yes Bank from a trading perspective?
Yes, absolutely. I'll be a buyer and only from a trading perspective. I'm not looking for a portfolio bet here. But if you look at some of the options data, it is very interesting because 220 call strike had a very high OI. And after the future price moving above that level today, we have seen that there is significant unwinding happening in the 220 call option. So I think most of these call writers are now trapped. And after today's breakout, I think because of this trap that has happened on the derivative data, another 8 to 10 rupees upside is very much likely from a purely trading perspective. So I think one can certainly look to take a BTST trade or maybe even hold on for 2 to 3 days. And I'm looking for a target of 232 to 235, and a stop loss can be maintained at 218. So purely from a trading perspective, I think another 10-12 rupees on the upside is what we can expect on Yes Bank.
Okay, 3.21% at 222 and counting for a Yes Bank in the session. What else has moved up as we get ready to hear out what dealing rooms are recommending in the session today? Just point out what's happening in the non-Nifty 50 names. The Nifty 500, for example, Gateway Distriparks was one. Johnson Hitachi, it's not a very liquid stock, very low volumes usually, but I think it's moved up a little bit. Look at that. It's an illiquid stock, so be careful about that. BASF India has moved up for sure. In the last few minutes, it's moved from the red into the green. Again, a similar pattern, so sharp uptick in the last few minutes of trade. AI Engineering, sharp uptick, more so in the last few minutes of trade. And I think Blue Dart Express. So a lot of these MNC related names seem to be doing all right. Johnson Hitachi, Blue Dart, etc., BASF India, all of these stocks shooting up in the session today. What's also been of interest, Hari, at the broader end of the spectrum is the kind of moves that some of the Z Group stocks have made. Today may have been an off day for Dish TV, but otherwise...
Actually, it's picked up. It's in the green now.
It's in the green now?
From morning trade, it opened lower and look at it now.
Okay, so in the green now, so not entirely an off day too, compared to yesterday, maybe slightly so. What do you do here?
We will get a real picture once the shorts get completely covered, because I think what we have been seeing in the last few days is a stock correct from about 600 down to about 150, and then there is obvious short covering that has come in. I'm not sure how much of value people really are seeing, and at least we don't see much of a value in Z, because if you take the market cap of Z and remove the the very doubtful loans that they've given to the infrastructure space, I don't think there is much of value left on the table. So probably you can play a short-term trade, assuming that at some point of time there will be another large media company that will come and probably bail them out. But I think that is too much of a high-risk game. So I wouldn't be too much of a, I would say, a bull on this entire space.
Real estate as a pocket. Now, Sunday, the GST Council meet is expected. Would you be interested if things start to turn around within the real estate space? I mean, it's been out of flavor for 2 to 3 years now. So, start investing it now?
See, I'm not sure how much of a difference the GST is going to make, because I think they're talking about a 5% GST as part of the total cost. I think the whole problem seems to be that there is a big oversupply in most of the large markets, especially if you take the high-value markets like Mumbai, Navi Mumbai, Thane, probably Gurgaon and Bengaluru. I think it's an essential problem where around 7 to 15 months of inventory is lying in most of these places. So I think that is probably the big challenge. But I think for real estate, at least if you leave out the large 1 or 2 players, if you really want real estate to bounce, I would believe that funding has to become easier. And today, most of the real estate companies you speak to are saying that money is just not available. Banks are not willing to lend to them. NBFCs don't have the funds to lend to them. So unless you are a DLF who is going out of debt totally, or a Shobha who is not really too much into debt, I think real estate companies have a problem on hand.
Oberoi, Godrej Properties?
Godrej, yes, but Godrej already is among the more, I would say, richly valued real estate companies. So if you're looking at a real estate bet, I would believe a south-based Shobha or a north-based DLF to me would be the stocks to look at.
Okay. Amar, let's talk about Dish TV at 37. What would you do with this one? And even a Jet Airways at 236.
Yeah, looking at Dish TV, I would say that Dish TV definitely has witnessed a very sharp recovery from almost 20 levels on 28th January. It's currently around 37 odd levels. So on the weekly charts also, I would say Dish TV clearly shows that it has formed a bottom. And on the upside, I would say the recent high which it had made in January of 42.43, that's a level where it could bounce back to, where we'll witness profit booking, because the long-term trend for Dish TV still remains bearish. It is only because it was close to support levels, and also it was being in oversold territory, we witnessed a bounce back. And talking about the other stock which you mentioned, Jet Airways. So if I look at Jet Airways, I would say that Jet Airways is currently trading sideways, and on the daily charts also it seems to be lackluster trading. On the downside, yes, it does have very strong support coming at around 200, 210 odd levels. But again, on the upside, I would say that somewhere around 240, 245, that's a key level of resistance. On the weekly chart, on the long-term charts, I would say monthly charts, it continues to remain extremely negative. So any pullback will be used as a profit booking. However, on the weekly charts, we are seeing some consolidation. So there is a very high likelihood that Jet Airways has bottomed out.
Okay. Let's get a sense of what dealing rooms are recommending in the session today. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Yatin, let's start off with you first.
Neeraj, Arvind Limited, that is one stock in the textile space which is under some selling pressure, 3% down for that one. Dealers on the basis of F&O trends are recommending a STBT strategy, which is sell today, buy tomorrow. Also, watch out for Tata Steel. That is one stock which is bucking the trend. And in general, non-ferrous metals and the steel stocks have been doing well. For the past few days. Look at Vedanta, look at Tata Steel. Dealers indicate that domestic fund buying happening as far as Tata Steel is concerned, and they are positive on the stock as well. And finally, do watch out for Raymond. That stock is up 5% as we speak at the highest point in the day. Dealers indicate that a lot of delivery-based buying is seen on the HNI desk, and there could be some further upside as far as Raymond is concerned. But Darshan has a few more stocks to talk about. Yeah, so Motherson Sumi is something that has surged almost 4% in today's trade. It's managed to move almost 6% now. Decent volume. Some of the domestic funds have actively taken positions in the counter today. That's what we hear from some of the dealing rooms. JSW Steel today, all the metal stocks are doing well. Most JSW Steel is trading at the day's high. Most of the metal counters, even Tata Steel, all of them have done well. Dealers believe that the momentum, at least in some of the metal counters, may may continue. And Jubilant Foodwork is down in trade. Dealers believe that some of the HNIs who had taken active positions at lower level are squaring off some of the positions.
Okay, Darshan, thanks a lot for that. That's a few stocks you need to keep an eye out on. Some of the mid-tier IT names, triple them up, Mphasis, Mindtree, Hexaware, just to get a sense of what they're doing in today's session. So Mphasis is picked up from the lows of the day. Mindtree is up in the green about 0.5%, definitely not at the highs, and Hexaware trades in the green by about 1.5%. The larger cap IT stocks over the last few days have given up the gains that we saw since mid-January post the numbers started trickling in. Mphasis now absolutely flat off the highs of the day. You've got TCS marginal gains of about 0.5%. Tech Mahindra and HCL Tech up next. So HCL Tech up a quarter. Tech Mahindra buyback being announced, stocks up about 0.75%. Hari, what would you do with IT and put them into different pockets, mid caps and large caps?
See, mid caps, I think we have had some pockets of preference, like probably Mindtree is a stock we have liked. Persistent Systems, again, I think is a stock that has shown good numbers quarter on quarter. That's a stock we have liked. Among the large caps, I think the only problem is while the Infis and the TCS are looking good, I would believe that most of the short to medium term stories is already into the price. So I'm not sure how much of an upside you can expect really in a TCS. Tech Mahindra used to be a reasonably priced stock for a long time, but I think even that stock has probably rallied like crazy in the last 1 year. So I'm not sure what is the margin of safety that is left. So large cap ITs would be a little wary. So, mid cap IT as a Persistent, Mindtree are two stocks we would probably look at.
Okay. Hari, stay on. Let's get in closing strategies from our experts. Just about a few minutes left before we shut shop. Amar, I'll come to you. What's your top call?
I would say one can look at Britannia Industries. This is one stock, if you look at it technically, it continues to remain positive on the long-term charts. And even in the short term, it has bounced back from almost 2750 levels to currently trade around 3000 odd levels on the daily charts. So this is one stock one can look at buying. So somewhere around current levels, one can look at buying with a stop loss of 2944 and a target of 3186 on the upside.
Okay. What about you, Shubham?
So I would recommend going long on Indigo because if you look at the options data there, 1100 put has a very, very high open interest, and I feel that for the stock to slip lower than that will be difficult in near term. Plus, technically, if you look at the movement, there's a wedge formation that is happening on Indigo, and I think it's quoting already at the lower end of the band. And we have seen most of the OMCs moving up. And normally this has a decent correlation with most of the oil marketing companies as well. So combining all these three data points, I think Indigo can witness a move up in the next week at least. So safe strategy, I would like to participate this with a call option. So 1140 strike call option, which is trading at around 10 rupees. That can be bought for a target of 18 and a stop loss for the same can be maintained at 5 rupees. So Indigo is the buy. And with a call option, one can look to participate.
Okay. Watch out for each of these names. IOC is now up 5%. Keep that in mind. Vedanta is at 170. Have people shrugged off the issues, Hari? The corporate governance issues that had cropped up? It's around this price from where Vedanta fell.
See, I would believe that the issue had less to do with India and more to do outside, because as far as Vedanta was concerned, it was more about the a group company actually increasing the stake. So I think that was more to do with the London listed company than with the Indian listed company. So I don't think that has really hit the corporate governance concerns too much. As far as Vedanta is concerned, I think the worry is more because of the Thoothukudi mine, the smelter which has been shut and which continues to be shut because I think Supreme Court has actually rejected the reopening of that. So I think that is probably overhang, but I would believe at this price most of the negatives on the copper prices seem to be more or less factored in. And if you're looking at a revival in China after the trade war gets, I would say, at least pitted down, we could have a better times as far as copper prices are concerned.
Okay, well, watch out. That's Vedanta for you. The other set of names, I think, if you just look at the Nifty small cap gainers, Suzlon, Reliance Infra, IRB Infra, that's the clutch of names which have gone up. Real estate has not done too badly today, by the way. DLF, ahead of the GST Council meet on Sunday, DLF is up about 2.5. Some of the others haven't done too badly either. So these stocks are moving up in trade. And we were talking about Bata. It's now up 2.5% at 13.15. So it's trading at the highest point of the day. When we were speaking about the stock, it was absolutely flat. Maybe P multiple expansion, or maybe market just starting to appreciate more and more what they've done in Q3 and what they could do. But terrific move today.
Yeah, and you know, valuations of even over 50%, I mean 50 times the next year, people are ready to probably put in the kind of money that they have been. So it was somewhere just sub 1300, I think 1295 odd, and then stocks moved up from there about 34 odd points right now on Bata. Hari, while obviously we've been talking about how some of these stocks are extremely stretched in valuations, the prospects are equally good. So, you know, whether to miss the bus saying that the valuations are expensive or to just hop on and deal with the valuations, hoping for the growth to support these valuations.
No, I wouldn't worry too much about valuations because, you know, I remember talking to your channel even on the day the results were announced. And I was saying that this is a stock that looks poised to be getting to new highs on a continuous basis because, you know, we are at about 46 times earnings. If you look at 2 year forward, we are about 30 to 33. So I don't think there is much of a worry as far as Bata is concerned. And number two, I think today, when investors look at India, you know, there is only one sector they are comfortable putting money, and that is consumers. And the traditional consumer names like your ITCs and your Hindustan Levers are just kind of too full with the investors. I don't think there is space left in those companies to get in. So probably it's the likes of Bata that, you know, represents the growing middle class, the growing income, you know, increasing rural spending. I think all that is probably going to be a benefit for Bata. And I would believe that as an investor, I wouldn't worry too much about the 45-50 times valuations. I think as a growth story, it seems to be extremely good even at these prices.
Okay. Amar, one final question to you. We don't normally talk about trades in some of these very small stocks, but Suzlon is a case in point there. Up 6%, 31% higher.
Yeah, this is I would say a penny stock, but the way the stock has bounced back from almost 3 levels, currently around almost 5.8. So I would say that weekly charts definitely show that the bottom has been made for this stock. But again, on the upside, if you look at it, somewhere around 657 rupees, that's a level of resistance. So those who are long, they should ideally look at booking profits because the long-term trend still remains, I would say, bearish for this stock.
Okay, Amar, we'll let you go on that note. Shubham, just one quick thought from you. Any OMC that you would buy, a BTST?
Most of the OMCs have already seen a decent up move, but still, if I have to choose one, I think the stock which fell least was HPCL, and now because all of the OMCs are moving up, I think it has already been an outperformer, so this can participate even further. So just a BTST trade, no positional view there, but for BTST, I think 237 can be taken as a target and a stop loss of 228. So this could be one long trade on HPCL that one can look to carry forward for money.
Okay. Stay on, gentlemen. We'll just get in final thoughts from you. But here's how the markets are shutting shop. The Nifty Bank pulled bogged down by Kotak and HDFC Bank is in the red. But aside of that, it's a flattish day of close. It's been like this for most part of the trading day today. So no big changes in the market levels, even though individual stocks have done well or otherwise. The mid caps and the small caps, incidentally, have done reasonably okay. So third or the fourth day on a trot now when the market breadth has looked positive, which is actually a really good sign for our markets. So let me talk about the large caps. Devina will speak about what's happening to the mid caps and the small caps. Firstly, the large cap movers. IOC 5%, HPCL about 3.5%, Vedanta 3.5%, JSW Steel about 3%. BPCL has some gains. There's some gains for Tata Motors and Yes Bank too, and Mahindra about 2% higher. What about the losers? Kotak Bank down about 4%, Reliance and HDFC Bank, and that gives you your answer as to the reason why the markets have been soft today. HDFC 2 in the red. So that's a serious set of heavyweights which have corrected today and kept the lid on the gains for the markets. But if large caps have done this, mid caps and small caps have actually done not bad because the index shows some gains, Devina.
Yeah, 0.75% in the mid cap index. It's a strong day for the broader markets, and the penultimate day at the end of the week, so not a bad close. Stocks, individual stocks, and today is a day where a lot of those penny stocks have moved up. In fact, today and yesterday. I'm going to start off with the Suzlon. Obviously, there is some talks of some M&A activity here, which is keeping the stock abuzz. Had gone up 33% intraday from where it's come off to about 25%. So some intraday profit taking on the counter. GVK Power, again, reports suggesting that they could be Adani Group could be looking to pick up stake in the airport, which has kept the stock active yesterday and today. So 2 days, 40% gains. Arnam, Take Solutions, both of them active. Arnam also on the back of the fact that Reliance Capital has invited Nippon Life to pick up its stake in Arnam, which would all go well for the company. Reliance Capital itself is up in the session. Magma FinCorp is the other one that looks strong. Gati by close will also have about 6% gains. Reliance Infrastructure, HDIL and Adani Enterprises are some of the stocks which are doing okay in the session. Losers, a few of them. We've got Just Dial, which loses out in trade today. You've got a Kaveri Seed, even after clarification coming in from the management. That's not really stirred too much in terms of sentiment of the stock, and it's still down 4% yet again. MTNL sees profit taking. Yesterday's session saw double-digit gains for MTNL, and today you've seen profit taking to the tune of about 4.5%. Persistent Systems is down, and so is Edelweiss. Edelweiss too, after the run-up that we've seen on the stock, when it was trading sub 140, it moved to levels of 150 plus, and from there back down to about 146. So there's some profit taking on Edelweiss as well. But that's the market for you this Friday afternoon. We're shutting shop for trade, not just for the day, but for the week as well. And it'll be an interesting tally on the index to see what's happened, because the first half was starkly different from the second half of the week. And that's a positive close for the index. So good going. Your gains, covered up for the losses in the first 2 days of the week. Vedanta stacked up with gains of 15%. ONGC another 10% higher. Oil marketing companies, remember, crude oil has hit 2019 highs. We've got 67 on Brent crude, so most of your oil marketing companies are buzz with activity on the back of that. Metals, Tata Steel, JSW Steel, both doing well, and housing finance companies, particularly in the fag end of the week, saw a lot of activity. Not just Indiabulls Housing Finance, your Divan Housing Finance, PNB Housing Finance, Camfin Homes, Repco Home, everything on that front.
Yeah, in fact, some weakness, of course, as we said, for some of the private banks like of Kotak and IndusInd Bank, and TCS, that overhang of a potential block deal weighing in. But IT by and large had a slightly iffy week too. But bring up, speaking about Repco and the others, let's bring up the mid caps and the small caps and see what those indices and what individual pockets have done there. Not too many losers. That's something that you could keep in mind. Dilip Buildcon, strangely though, because it's had a very good run in the preceding weeks, ending in the losers list. Divi is another name which has ended in the losers list, and HEG and Graphite India are the other two names which have corrected in the week gone by.
Some real estate names making a mention because the excitement ahead of the GST Council meet kept stocks like Prestige Estates active, up about 8% Dish TV this week was good, last week was even better, and the counter has just kept going higher and higher. Reliance Infra and Jindal Steel, the ARA Group stocks actually as a whole this week has not been bad.
Yeah, it's not been bad at all. And the small cap space will next come up on your screen. Suzlon, 71%. That's not what you usually see.
And the stock is still 5 rupees.
So, yeah. Yeah, that's the funny part, isn't it? Welspun Corp, not a bad move too. But I mean, this is breathtaking, yes. But Welspun Corp and JP Associates, I mean, the list of names are all those beaten down names. I mean, I don't see maybe an Ashoka Buildcon at an order wins and 10%, but otherwise, all of these
but that
are
was just, I think, yesterday's session.
Yeah,
today didn't
session.
do a whole lot much.
Yeah, that's true. And the loser as well, Kaveri Seeds on news, is down about 16%. Anyways, interesting week gone by. The question is what happens in the week ahead. First, chart perspective, do you reckon we can move higher from these levels, Shubham? Okay, I think Shubham's, we'll just lost Shubham, but Hari, the same question to you. Is the sentiment looking like we could rise from where we are right now?
I would be a little skeptical, frankly, because I think, what typically happens is that in a market like this, there are a lot of global cues which are not actually favorable for the Indian market. So, be it crude, be it the trade deficit, be it, I would say the weakness in the rupee, be it what's happening in terms of the US-China trade war, I would believe that most of the global cues seem to be negative. So, we probably have seen a 1600 points fall in the Sensex and a 500-point bounce, and I would believe we are done with. So either we are static at these levels or going down once again.
Okay, static at these levels or going down once again. That's the word coming in from TS Harihar. Great having you, Shubham, as well as Hari, for joining in today. Thank you so much for taking the time out. And viewers, on a positive note for the markets, thank you so much for joining into Bloomberg Quint the whole of this weekend today. From Devina and me and the team that put this show together, thanks so much for watching. Stay tuned though, the weekly market wrap is coming up next.